Procter Gamble is the big winner today, fueling the Dow's gain, adding about 42 points to the Dow's 180-point rise after the company posted surprisingly strong sales growth. In fact, the best we've seen in 5 years. 4% organic growth. That was double what Wall Street was expecting. Also better profit numbers. What drove the increase? Well, the company is seeing a big turnaround in a lot of its businesses. Beauty was the highlight. Double-digit growth in brands like Olay and SK-II. Home care also did quite well, up 2%. That is Tide and Febreze. Even Gillette in the grooming sector was strong, and that had been a weak spot lately. 9 out of the 10 categories that P&G sells actually saw growth. Why now? Well, higher prices actually helped. P&G raised prices on Pampers diapers, Bounty, Charmin, Puffs brands. That was a big strategy shift, and it panned out well for the company. The CFO also says that P&G has managed to grow market share in the U.S. and abroad, and the company really called out the strength in the United States, which is the largest and most profitable market for P&G. So that's clearly a reflection of a better economy, better pricing power, lower unemployment rate, and steady wage gains we have seen in this economy. They also gave some comments on the conference call about the early read they're seeing a few weeks into October. CFO says we haven't seen a drop-off in shipments and consumption. They did keep guidance the same, reiterating that 2 to 3% organic sales growth for the year, EPS growth of 3 to 8%. A lot of analysts saw that as conservative, but keep in mind, this is a company that is getting slammed, and we saw this in the results with the stronger dollar, rising commodities costs. Both of those weigh on profitability, so perhaps a reason there for the caution going forward. But despite some of those macro issues, volatility in emerging markets, they talked about the Turkish lira, for instance, this was a much better result, and I think what you can make of it is it was a combination of a turnaround plan, higher prices, and a better U.S. economy.
Well, investors have been looking for organic growth for this company for years and have been disappointed. What gets them there? Do we understand what it is they're doing differently than they had done previously, Sarah, that is allowing them suddenly to start to perform the way they have this last quarter?
A few things. Number one, they chopped a lot of categories and a lot of brands over the last few years to focus on the core. And they have argued a long time, including in their very publicized and messy battle with Nelson Peltz, who eventually did join the board, that that was the right way. He also wanted them to focus more on individual brands and innovation. That appears to be finally bearing fruit. The CFO did talk about some of the innovation in fabric beads, for instance, driving margin, driving their ability to pass on higher prices to the consumer. So you see it there. So the focus, the fact that they shifted strategy on pricing, over the last few years, it's all about discounting and trying to compete with private label, and they sort of got rid of that and have embraced the higher prices and the more premium brands in what is a better consumer environment, and all of that is working in Procter & Gamble's favor. They said that it's not going to be a straight line to growth right now. I mean, they sort of tempered the enthusiasm a little bit on the call this morning, but this is definitely an inflection point when you look at the underlying sales growth across the business.